Good morning and welcome to Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. Thank you for joining us this 27th of January 2015. Certainly we are recovering from a bit of a snowstorm in New York City area, so excuse me, you'll see a little bit of a impact on initial trading this morning. That's at least our contention. But again, let's jump into what's happening this morning. Certainly a lot going on overnight, especially from Europe. We have the S&P futures this morning lower by 25 handles, even this morning at 2028.50. We have crude oil at 45.47, higher by 30 cents this morning, still hugging that 45 level. We'll get into the technicals in just a few moments. We have the 10-year below the 1.8 again. We were discussing that yesterday, where that 1.8 level is seeming to be existing for the 10-year. It likes that level, a little bit above, a little bit below, but certainly that 1.8 level is certainly still key for the 10-year. 30-year, we are below that 2.5 level again, 2.354. And what's more important is the yield curve, the convexity of the yield curve, if you will, and we'll get into that in a little bit. So let's take a look at where we were yesterday in in the markets yesterday. Certainly slightly subdued day in the markets. The Dow Jones Industrial Average higher by 0.3%. S&P 500 higher by 0.26% at 57.09. NASDAQ higher by 0.29% at 4771.76. When we take a look at volatility yesterday, certainly, and again, we just want to bring this up. We don't want to harp too much on this, but certainly we feel that weather did have at least an implication on activity towards the end of the day. Was at the beginning of the day a little bit of a kind of a lower tone to the market, a negative tone to the market initially, and then towards the noon time, we really stabled out at near flat in the SPX and really continued that in a rather tight range through the end of the day. But again, we can point that to the preparation for the storm. So we'll just leave that as that, and as things develop, should something bubble up with respect to the storm, we'll let you know. But we feel that things are just going to straighten out, if you will, towards the end of the day, and hopefully we'll get a little more activity. There is indication that some folks are being delayed this morning, but again, we'll see how that goes. Let's get into what's really impacting markets this morning. Certainly, we had several large companies disappointing with earnings, anything from in Europe with respect to Siemens, or in the U.S. With respect to Caterpillar and Microsoft. So we'll take a look at those securities as we progress here. But again, from a geopolitical perspective, we're certainly keeping an eye on ISIL situation in the Middle East. Also in the Middle East, from a geopolitical perspective, we're keeping an eye on Saudi Arabia's influence and what they say with respect to oil prices. Certainly, we heard over the weekend and yesterday, basically saying that the new Saudi king, if you will, and some commentary there that really no change in OPEC sentiments with respect to oil prices. So We'll see how that progresses into the day. So let's continue here. What are the themes for the day? When we take a look at some of the, for example, the dollar this morning, we are lower on the dollar at 94.191, lower by 0.616. Euro is higher this morning, rather significantly, at 1.1352. But again, one of the central themes here is that there has been a rather strong U.S. dollar, weaker euro dollar for the last several weeks, if not into months, that we've been monitoring this. But again, this is something that is still developing, and we'll see what the true implication is into 2015. We think these are themes that will continue into 2015. Certainly, oil, as we talked about, continued lower price. We'll see if this 45 level holds. Certainly, that level of $44.20 is rather critical on the downside. Again, we'll get into the specifics of that. Also, as we listen for central bankers' information as it's coming out about the macroeconomic perspective, we'll hear more discussion on deflation risk. We know that deflation or lower inflation expectations or lower inflation in general has entered the lexicon quite significantly on the part of the central bankers. Greek election implications. Certainly, there's a lot of rhetoric that's happening in Europe with respect to the Greek election. What will really impact? We'll see. We'll see how that. Turns out. Again, we're seeing some rather significant Greek equity weakness this morning. That's one of the central themes that we want to keep an eye on. Also, rate decrease, a significant decrease on rates, as we have been indicating over the last several weeks, at, for example, the 5-year at 1.282 and the 10-year at 1.763. Certainly will have an impact on how central bankers approach will have an impact on how central bankers approach economic stimulus, with certainly rates being so low. Also, want to mention that the Russian economy seems to be back in focus as we see the implication of the reduced, the lower ruble versus the U.S. dollar specifically. Also, as there's more hearing of more fighting, more fighting on the Ukrainian side. Certainly, more sanctions may certainly be in the pipeline, if you will, and as we were mentioning yesterday, what will be Russia's reaction to that, and certainly one of the themes that we've been discussing for 2015, and that is Russia's relationship with China. So let's get into some of the specifics of what we're hearing, what we're seeing this morning with respect to the U.S. Economic activity. Baltic Dry Index falls to 688 points, a decline of 2.1%. We've seen a precipitous decline in the Baltic Dry Index, now below 700. Folks, if you haven't been watching this, it's a very interesting indice to monitor. Great indication of actual economic activity on a day-to-day basis. Tends to be a bit of a leading indicator, if you will. So again, we want to monitor this. And this particular Baltic Dry Index, it follows container ships with respect to grains and raw materials. So this is a wonderful way of seeing just real, I don't want to say real time, but certainly a a wonderful representation of economic activity as it happens. Durable goods this morning, excuse me, lower by 3.4%. At survey was to be higher by 0.3%. Prior was 0.09 to the downside. X autos negative by 0.08%. So a bit of a caveat with durable goods. Remember, depending on the time of year, this number does tend to be a rather volatile number as we begin, as you monitor this more and more. I remember back in the summertime, there was a rather large a large gain in the durable goods orders, but that was because of an an air show, if you will, and then the next month a huge decline as well. So again, we don't want to reduce the importance of this number. Certainly, it's one of the leading indicators in the U.S. economy. But again, one should approach this with a little bit of caveat. Certainly, chain store sales coming out this morning. Also this morning, S&P Case-Shiller home index, home price index coming out this morning. PMI service index flash. New home sales and consumer confidence. Richmond Fed manufacturing and State Street investor confidence. So certainly we have a tremendous, a plethora, if you will, a plethora of information coming in this morning. As we're seeing the futures, let's take a look at the futures, still maintaining a negative 25 handle to the downside at 2028.25. The dollar lower, still continuing its decline here at 94.114. Keeping in mind, dollar had a significant rally as of late, so we'll continue to monitor this. So again, specifically on the Russian side, we wanted to bring this up specifically on oil prices. With oil prices being so low, we will continue to see until there's a clear indication of where oil prices may be. We'll continue to see rhetoric. We'll continue to see commentary with respect to OPEC nations. We've seen about a week and a half ago or 2 weeks ago that Venezuela attempted to influence OPEC nations without success. We also saw that Venezuela and Russia were going to have a joint announcement with respect to oil prices. And again, this is something that folks will continue, and certainly we'll get into specifics of what to watch for oil prices if you're not only watching the oil prices but ETFs, ETNs. Certainly, as we said, Russia, the Ukraine situation, certainly there's some strife going on between Russia and Ukraine continuing, and really it's not the fact that whether or not the West will impose more sanctions, but what Russia's reaction will be to the West, and again that relationship with China, how that develops into the rest of 2015. And again, something to keep in mind, and that is the approval rating for Putin is at an all-time high in Russia. So this is something to keep in mind. There's a huge disparity between the West's opinion on what Russia is doing with their Ukraine and impact on economy in terms of the sanctions, and what's actually happening internally in Russia. It's rather amazing to see the dichotomy in opinions outside of Russia and inside of Russia. It's rather striking, frankly. So again, themes of 2015. Um, One of the things that we're keeping on, certainly FOMC decisions, rates, treasuries, global central bank actions and commentaries. Well, as we said at the end of 2014, going into 2015, this is going to be a continued focus on certainly central bankers. We saw that the Swiss National Bank, as you recall, was a surprise removal of the Swiss franc to euro cap, and that's again those type of actions will continue. Certainly, oil, natural gas. Prices, something that we're keeping an eye on. We'll review those in just a moment. Certainly, the situation in Russia, Ukraine, and Russia, China will continue into 2015. There's no letting up here, folks. And whether or not this will continue to have an impact on markets, and whether markets have internalized specific situations with Russia, Ukraine. If there's something that happens that's a little bit more on the cataclysmic side, Lord forbid, but certainly then perhaps the markets will have a greater impact, greater volatility specifically with respect to that. Certainly keeping an eye on OPEC, non-OPEC commentary, and of course macroeconomic and the possibility of this currency wars, because remember what's at stake here, folks. What's at stake here is if the exports in a particular region, for example, in the eurozone, are not they're unable to sell their products. You want to reduce the currency to at least ignite interest with respect to pricing from other currencies, and that's something that's happening in the eurozone as we speak. Certainly, with the euro being lower in general, but certainly it's higher today, lower dollar this morning. So an overnight, let's take a look at overnight sessions this morning. Bear with us one moment. So in Asia, we have the Nikkei higher by 1.72%. We have the Hang Seng lower by 0.41%. Shanghai lower by 0.89%. So again, a little bit of a mixed market in Asia, certainly, and in Europe, lower across the board. We have at FTSE lower by 0.91%. DAX in Germany lower by 1.32%. IBEX lower by 1.08%, and the CAC in Paris lower by 1.36%. So again, the negative sentiment is continuing. We have a little bit more of a decline in the S&P futures this morning, now lower by 26.5 handles at 2027.25. So one of the things that we'd like to keep an eye on, so let's jump into on the oil side before we get into the technicals a bit. On the oil side, this is what we like to monitor from the oil side in terms of ETFs, ETNs, as it relates to volatility. So one of the things that we talked about yesterday, what correlation do all of these have with respect to oil itself, right? Can you trade the underlying names, or at least watch the underlying names? For example, in the OIH, certainly Schlumberger and Halliburton have a significant piece in the OIH ETF. But again, what's the correlation to oil? And as oil is continuing its lower prices, really not seeing any specific indication on where oil will go in the near future, but certainly enough rhetoric and enough opinions out there to, in our minds, indicate that volatility will continue as long as you have this difference of opinion. Certainly, impact on producers is important, and certainly impact on CPI and PPI data as it relates to specifically oil. Remember, the longer oil stays lower, the less of an impact it will have on certainly on inflation, and that's where the CPI and PPI data really takes its aim there. We mentioned this a couple of days ago. We wanted to keep this up. Still important. Secretary Lew doesn't expect U.S. crude production to decline. Also, Goldman Sachs' Cohen saying that oil prices may hit 30. So that's something that's we want to keep an eye on rather closely. Oil this morning now lower by 4 cents at $45.11. And that's something that we are keeping an eye on rather closely. Let's jump into commodities, energy, and raw materials as as we watch this this morning unfold. We are about a little bit over 8 minutes away from the opening bell in New York. So again, quick check on S&P futures, continued decline, 2026, even down 27 and a quarter handles, 27.25 points. Crude oil lower by a penny, now at $45.14 on the distillate side. Gasoline at 1.2994, lower by 0.0163. Natural gas higher by 0.079 at 2.960. Still within that, still really liking that $3 mark, and that's something we want to keep an eye on. Heating oil, we are at lower by 0.0129 at 1.6269. So again, one of the things that we mentioned yesterday is this possible implication of the blizzard, the winter storm that's impacting the Northeast, and certainly, again, just anecdotally, watching that it's not, watching how it reacts with respect to demand. So again, nothing cataclysmic yet from the storm. We're expecting this to continue for the rest of the day. Let's take a look at gold this morning, higher by $7.90. $8 now at $1,287.40. We have silver lower by 0.003 at $17.98 even. Now we are below the $18 level. This is something very interesting here. It was above the $18 level for quite some time. So again, want to take a look at this. Platinum higher by $6.80 at $1,261.08. We want to take a look at the rate environment specifically. So let's take a look. As we're taking a look at these rates, keep in mind they have been the 5-year, and this is something that we've been watching rather closely with respect to the yield curve. The 5-year at 1.28%, lower by 70 cents. The 10-year, I'm sorry, let me rephrase that. Lower by 72 basis points, so at 1.278 on the 5-year, 10-year 1.758, lower by 70 basis points, and the 30-year 1.342, 2.342. So again, lower on the yields across the board, and that's something that we want to take a look, keep an eye on, as we've been mentioning yesterday. Really, the true implication here is that yield curve. If you take a look at a year ago, rather steep on the 2, 5, 10, and 30 year. If you look at it now, much flatter on the 2, 5, 10, and 30 years. So I think that's something that's rather important to note and important to monitor. Uh, so again, we'll continue to see this unfold, and we really want to see where central bankers have an opinion on this. Certainly, one of the things that we did not mention this morning, and forgive us, is the beginning of the FOMC meeting today and decision tomorrow. Really, there's lots of conversation on whether or not rates will increase in 2015. Morgan Stanley out this morning saying that they can actually see rates going up in 2016. So again, as we have been mentioning, we like to think we're a bit out in front with respect to rates, and that is rather important. So again, let's jump into some of the technicals in the ES specifically. We can take a look at ES. So taking a look at ES on the morning side this morning, we're actually near the low of the day, 2026 even. We have that initial support at 2025. Made that low just minutes ago here. So we have initial. So we're looking at the 2018-2020 level on the S&P 500 S&P 500 futures. On the resistance side, we're looking initial resistance at 2033, 2035, and then more on the macro side, on the daily side. On the ES, we're looking at the 2045 to the 2050. We can take a look at the on the daily side. Certainly, we've been more or less range bound, if you will, really between that 2025, and we did make a high of 2060. So again, keeping an eye on that rather closely. On the crude oil side, one of the things that we want to keep an eye on, certainly. As of this morning, we're in a little bit of a range here, folks. So taking a look at right just below that 45 level and going up to that 45.75 level. Really, the level to watch here, folks, is that 44.20. If it's broken, we can very easily go down to the low 40s, if not the 39, the 30s. And again, we mentioned this morning that Goldman Sachs Cohen mentioning that can definitely see oil in the 30 range. On the VIX side, we're certainly taking a look at, with certainly volatility increasing, we're looking at VIX to pop a little bit, at least in the morning. Certainly taking a look at the daily, we went up to 2360, and then before that we went up to in the 25 handle range. Again, want to monitor these. So again, certainly previous highs will, certainly become resistance at 23.49, certainly, and the 25 level is something that we're watching. So again, watching to see how this VIX trades this morning. One of the things that we're also keeping an eye on is, of course, gold, and we have gold this morning. Again, below that 1300 level. We mentioned that level before. So really, the range here is between that the 1250 to the 1300 level, and again. We'll see how that turns out within trading today. Certainly, volatility in the market is continuing, so we'll see what impact we'll have on gold. The other piece that we're keeping an eye on, let's take a indication on futures, extending its decline into the open this morning. We're at the 2025.75 level now. Again, that 2025 support is rather important, lower by 27.5 handles, lower by 27.5 points. So again, keeping an eye on that. Also, dollar, we've been mentioning certainly continued strength in U.S. dollar on a macro level. certainly we want to keep an eye on that. And And as we certainly today is a little bit of a reversal of that trend. Dollar at 94.034, lower by 0.77. Euro at 1.1371, higher by 0.0099. So that's something that we want to keep an eye on. A few stocks to take a look at this morning. We had certainly again New York, the NYSE, New York Stock Exchange, plans to operate on a regular schedule today. We certainly had a little bit of some stragglers coming in this morning on New York, but again, full operation on the New York, keeping an eye on that. So again, one of the things that a few things in play this morning, certainly Twitter. Certainly Twitter in play this morning. We want to take a look at that, indicating a lower open this morning, currently at $39.34, and we have been open for a little bit of time on the New York. CRRC, there was a non-binding offer from RRD, so CRRC was halted this morning. Initially, we're seeing a $23.20 indication this morning, but again, we'll see how that turns out in actual trading. RRD, RR Donnelley, currently at $16.58. Certainly, one of the things that we want to bring up is certainly Caterpillar in specific stocks, lower this morning by over 6.5%. Currently at $80.41, a significant gap down in following their earnings. Also in Microsoft as well. We'll get to that in a moment, but certainly Microsoft as well, and certainly these being Dow components and rather significant influencers on the macro indices. We'll see that weakness continue as long as these stocks are lower. Microsoft lower at 8.5%. At $43.03 this morning. Taser, an indication from Charlotte that Taser received a 1,400 digital camera order, currently at $27.51, lower by 1.36%. GLW also lower this morning by 0.75%. Earnings call this morning, currently at $23.74. NSC upgraded at Argus this morning, although it is indicating lower by 2 cents. At $103.91. Also, let's take a look at a few more here that we're just getting through here. There's just continued commentary in Tesla into this morning. We certainly had some opinions rendered yesterday into today. Tesla lower by about 1% this morning at $204.56 this morning. Also, Triple M, 3M this morning says FX could reduce earnings per share by 20 cents year over year in 2015. Folks, this is something that we've been mentioning for quite some time, and this impact of the strong U.S. dollar versus other currency. Remember, it's when the companies return are ready for their earnings and money comes back into the U.S. Remember, if it's coming back into the U.S., you have a stronger dollar. It's going to impact earnings, and that's something that is rather significant here. So again, continue to watch how the earnings season coming out. We mentioned this in 2015, late 2014, and how earnings may be impacted by the strong U.S. dollar. So again, we're starting to see that. We'll see where rhetoric takes shape with that. So again, let's take a check of where we are in the markets as we prepare for the rest of the day. We'll take a look at the ES, the S&P 500 futures, lower by 28 handles now. It's rather significant, folks. This is a significant downturn here. So again, watching that 2025 level, currently at 2024.75. So just we're literally in the midst of cracking that support at 2025. The U.S. dollar 94.024, lower by 0.778. The S&P, the euro at 1.13 handle, 1.1375. Again, it's, as you recall, rather volatile. We have oil at 45. $45.36 this morning. So we'll continue to monitor that as well. Folks, thanks for listening to Unusual Activity this morning. If you're in the Northeast, continue to stay safe. This has been Unusual Activity powered by FinancialJuice.com with George Avedon and Milton Marmonides. We thank you for joining us and wish you a great day and good hunting.